Hey guys, it's James. Let's talk about RYLD, a fund from Global X, very similar to the QYLD. And I'm going to show you on Global X's website where RYLD might be a little bit more, might be a better fund for you to invest in instead of QYLD. And then we'll head over to my dividend investing calculator that I built. We'll look at a $10,000 portfolio, a $100,000 portfolio, and then a more modest $1,000 portfolio with a $50 or more monthly addition. And then we'll see what the 5-year, 10-year, 50-year graphs look like with those inputs. So let's go ahead and head into the graph. So here we have the Global X Russell 2000. It's ticker symbol RYLD. It's a covered call ETF. Currently the fund share price, depending on what website you're looking at, it's sitting around $24, and again the dividend yields around 12% depending on what website you're at, and their expense ratio is 0.6. It pays out a monthly dividend very similar to RYLD, so every month you're going to get about 25 cents, and then annually you will get close to $3. Let's go ahead and kind of investigate, look at the basics of RYLD before we jump into the actual calculations. Let's go head over to Global X's RYLD ETF page. It follows the Russell 2000, and they do covered call options on it. So right here they have the reasons to consider investing in RYLD, and for one, very similar to QYLD, RYLD seeks to generate income through covered call writing, which historically produces higher yields in periods of volatility. RYLD makes distributions on a monthly basis, and then RYLD writes call options on the Russell 2000 index, where QYLD would write Global X writes call options on the NASDAQ 100. So if we go down here and look at what is the Russell 2000, and it's kind of peculiar here, but it looks like currently they are just buying Vanguard's Russell 2000 ETF fund, VTWO, and doing covered call options on that. Now, the inception of RYLD, I believe, was just this year. Excuse me. It was in 2019, so it looks like they have not purchased their own stocks, but are just using Vanguard's Russell 2000. Let's go over to, and I wanted to show you here the difference between RYLD and QYLD. If we go over to their Our ETFs page and we check out, and instead of the overviews and fees, we're going to go to performance, and this is all of Global X's ETF funds. Apparently they have 90 of them. Let's just do a quick search here. Let's check for their covered call ETFs, and as of right now, all their covered call ETFs, which I believe they only have 5 at the moment, December 2021, RYLD is their highest cumulative return. It's a 19% year to date. That includes a 5% growth with a close to $3 annual dividend. And then they have XYLG, which is their S&P 500 covered call and growth. Their QYLG, which is their NASDAQ 100 covered call and growth. XYLD, which is purely the S&P 500 covered call. And then their poorest performing covered call is the QYLD. So that's kind of interesting. Sitting only at, which is not bad, a 10% year-to-date cumulative return, including growth and dividends. And it looks like if we go to the bottom of the list, they only have 5 covered call ETFs. Now, the difference between a covered call ETF and a covered call and growth, from what I could find, was that with their covered call and growth ETFs, they do a 50-50 split, where 50% of the fund they do covered call on it, and the other 50% they let it grow. So it looks like it's been pretty successful for QYLG and XYLG. It's outperformed their XYLD or their covered call counterparts. However, the purely covered call RYLD, which I do not see a covered call and growth comparable fund for the Russell 2000, it looks like it is outperforming all their other funds. Let's go head over to the Yahoo Finance page just to check out some numbers here. It looks like the past year it has gone from 22.66 share price all the way up to, it was up to 25.70, but it's taken a tumble here in the last month and it's down to 24.01. So by my math, That's close to a 6% annual growth. Head over to Seeking Alpha, check out their data. They're similar numbers. I don't know why sometimes these things don't match up between the different finance institutions, but a year ago, RYLD, according to Seeking Alpha, was 22.7. And today it is 2407. I guess after market numbers is going to change. For some reason it says 2401 here and 2407. I don't understand the discrepancy, but overall, Seeking Alpha is saying a 5.45% growth, not including dividends. So we're looking at an expense ratio of 8.6. And Seeking Alpha says 12.23% yield. For our calculation, we'll just go ahead and even it out at 12% like we did QYLD. One last thing before we head over to our spreadsheet, let's just check out the dividend history. So again, the inception date of RYLD was only since mid 2019. So we go to their max history and you're looking at May 2019. All right, so they're pretty consistent. They've had a few low months where they have slashed their dividend payout, but it's been holding steady for about a year now at about 20 cents. Slowly crept up to about 25 cents where we're sitting at 12% yield. It's about $2.88 annually. Let's go ahead and head over to the spreadsheet. All right. We have all these numbers in here. All right, let's go ahead and look at what we would have in 1, 2, 3, 4, 5, 8, and 10 years. This is our short-term graph, and then this would be our long-term retirement graph, if you will. And then we have the color-coded if you had a monthly addition, left it in the bank, this is what you're going to have in the bank. The reason why the bank goes up with 0 monthly addition is because the bank gives you that very sweet 0.02% interest, which I have in the calculation here, which is basically nothing, which doesn't even beat inflation. And then I have dividends not reinvested. So if you pulled the dividends out, you would have, if you invested $10,000 a year from now with just the 5.96% growth rate, if 22 performed like it did in 2021, if the Russell 2000 did, or Global X's Covered Call ETF did, that's what you would have. And then after 3 years, your 10,000 would be 11,754 with dividends reinvested. Pretty impressive. Just 3 years. Let's just take it short term here. 1 year, you would have an extra $1,300 if my math's at $1,270 if you reinvested the dividends every single month, which is pretty impressive. Let's go ahead and bump it up. Let's just say you are a high roller and you had $100,000 in RYLD in your portfolio, or let's say you had $100,000 and it was YOLO'd into RYLD, which I would not recommend. You would be looking at, after 1 year, without dividends reinvested, an extra $6,000 increase. With dividends reinvested, you would have a $18,000 increase within 1 year. And if you want to pause the video and take a look at these numbers and just check them out, that would be great. And again, I am working on a multi-dividend portfolio to be able to match kind of what they do over at M1 Finance, where you put in a large sum of money and then you can divvy up however you want with different funds and different buckets, and so that'll be fun once I am able to complete that. But let's go down to something more modest here with our growth and contributions. Let's say you only had $1,000. Let's say you started January 1st, 2022, and you were able to scrape up $50 a month, and you had an initial deposit of $1,000 into RYLD. So after 1 year, your bank account would just have your $50. After 12 months, you'd have $1,600. With dividends not reinvested, you'd have an extra $76 compared to the bank account. And then with dividends reinvested, your $1,000 would turn into $1,800 with a $50 a month addition. And then here is your 2-year numbers and your 3-year numbers. And this, again, is assuming that you have a consistent annual growth rate and the stock market is linear. But remember, past performance does not equal future results, but this is the best way that we can predict the future, is by looking at the past. So if you guys enjoyed that video, head down to the comments and let me know. Smash that like button. That gives me an indicator that you guys are liking this type of content. If there's something else you want to see, let me know. I enjoy creating calculators like this. If you guys like viewing things like this, let me know. If you guys enjoy content like this, go ahead and hit that like button. That's the best indicator of me knowing that you guys like content like this. And then head down into the comments and let me know if there's another fund that you would like me to analyze in this way. And with that, thanks for watching.